The Fed made an announcement that they're going to hold rates steady,
Yep.
which probably wasn't necessarily too surprising
Nope.
given what's going on. And we're going to talk a little bit about that. But what does this mean for some of our clients? What does this mean for those that
Yeah.
are listening? What are
Yeah.
what are we seeing? What are we thinking?
Yeah, I don't think that the fact that they held rates steady today was any shock.
Yeah.
I think it's what, when Jerome Powell takes the stand and starts talking, it's the forecasting and his outlook that causes problems. And, as you look at today, the moment he took the podium, the markets were down a little bit.
Yeah.
But the markets dropped about 1% from the time he started talking until the close of the markets. So the Fed's in a really unique position that they haven't been in for a while.
That's true.
Right. And so you look at the fact that there's a little concern over inflation starting to creep back in. And they
Right.
started to look at that. Now,
Because
could
it's held
st-
steady there for a little bit.
it was actually declining.
Yeah,
It was
yeah.
getting in a much better position. So you look at the fact that there's an inflationary risk that's coming back out. And now what the Fed hasn't had to deal with is slow job growth.
Right.
And so before we'd had pretty robust job growth, labor markets were pretty good. So they're in this position because they've got two mandates that they work about: managing inflation and keeping the economy and jobs going. Now they have to worry about inflation,
Right.
which makes them want to raise rates, but you have slowing job growth, which makes them want to lower rates. Now they're in a problem.
Yeah.
Right. And so where do they go from here? The forecast was for one or two cuts later this
Yep.
year. That's been forecasted now by Powell today to probably one. And if you look at the predicted markets, you look at the bond markets, there was about two cuts kind of in there. Now, one cut this year dropped from about a 55 to 60% chance to around 40. Now, here's what I will say. It's always overreactive the day that he speaks. It takes a little bit for everybody to digest the
digest
notes
it,
and
yeah.
see what's going to happen. Here's what's important: positioning in your portfolios.
Yes.
Right. And making sure that you're rotating to taking risk off for risk assets. You're rotating to areas that the market can still do good
Right.
in this type of environment
And not overreacting.
and not overreact. Patience is always good when it
Yeah.
comes time to invest.
Yeah.
So I think we're in a good spot. I think that, it's important for our clients to know that these are the types of things that we monitor.
Right.
We're going to continue to position ourselves for whatever market cycle comes. And today's news wasn't a shock, but I think the forecast was.
No, I think you're right. And I think to your point, this is where we really start to focus more on the strategy and the predictable strategy versus trying to forecast and predict some other future event.
Right now you can't.
Yes, right. That's right. If you'd like to learn more, check us out at prevailiws.com.